Next up, let's take a look at a special WION segment called Money Matters, because money does matter. India is getting ready for one of its biggest tax resets since the rollout of goods and services tax. The GST compensation Cess, which kept taxes high on tobacco, cigarettes and pan masala, is set to end next year. Now, to prevent revenue losses and keep these sin goods expensive, on Wednesday, the Central Excise Amendment Bill 2025 was discussed in Lok Sabha. Let's break down what the new levies would mean. The GST compensation Cess, added back in 2017 to offset revenue losses for states, was always temporary. Now that it's being phased out, the government has moved fast to plug the gap. And Finance Minister Nirmala Sitharaman on Wednesday said the levy of excise on tobacco will ensure that incidence of tax on the demerit good remains same even after the expiry of the GST compensation Cess. Now, moving the Central Excise Amendment Bill 2025 for discussion and passage in the Lok Sabha, Sitharaman also said that since the GST law caps maximum rate of tax at 40%, the ultimate tax incidence on tobacco after removal of GST Cess would come down from the current level if excise duty is not levied. This brings back a strong excise duty on tobacco products. Under this bill, excise duties will fall in the 60 to 70% range. And for cigarettes, the rate will depend on the length of the stick and whether the product has a filter. The Finance Minister earlier on Monday also clarified that the existing GST compensation Cess on tobacco will be removed only after all loans and interest liabilities linked to that Cess are fully paid off. But why is this important? Well, the government wants to prevent a drop in tax collection when the GST Cess expires next year. The new excise duty will keep tobacco and cigarette taxes high and ensure that states do not lose revenue when the compensation mechanism ends. The second bill, the Health Security and National Security Cess Bill 2025, targets pan masala and any other goods the government may notify. Unlike the old system, the new Cess will be based on the declared production capacity of machines and not the actual output. A move that's aimed at reducing underreporting by manufacturers. Both big and small producers will have to register and pay a fixed monthly Cess. So, what does this mean for the market? Prices for tobacco products, cigarettes, gutka and pan masala are expected to remain high even after the GST Cess disappears. The new system promises more compliance, steadier revenue and stronger funding for public health and national security programs.